Hey traders, welcome back to Valorizo Capital. On today's video, we're going to go through the market update and we're also going to take a look at the weekly watch list. Remember guys that this video is for informational purposes only, is based just on my personal opinion and is not financial advice. So we have had some pretty amazing weeks for the bulls here. So it has been a really strong beginning of the month, as we have been expecting, and we actually tag the target that we have been talking about for some couple videos, from a couple of older videos that we have here in the channel. We have been talking about this target, this 4,525 target in the SPX, and we actually give it a little kiss on Friday, which I think is actually pretty amazing. So I'm gonna have that video link in the description if you want to take a look at it, if you want to understand what was the psychology behind thinking that we might see that extension to the upside in the SPX. So basically, as always, the purpose of these videos is just to create a roadmap for next week, right? And I think that we have been doing an amazing job of creating these roadmaps to stay on the right side of the path of least resistance in the market. So what is the path of least resistance? The path of least resistance for next week. I actually think that the path of least resistance for next week is going to be a little bit to the downside. Why do I think that we might see a little bit of back and filling and a little bit of pullback in the market going into next week? First of all, because we already reached this very important target of 4,525, and this was a target that we have been watching for a couple of weeks now. And most importantly, this target is this on-fill gap that we have all the way back into April 2022. So we have been looking at this target, and we actually achieved this target, and we have seen that based on seasonality, right, we have some really bullish seasonality coming into the first 2 weeks of July. We actually achieved those first 2 weeks of bullish action. And now going into the third week of July, we tend to see a little bit of back and filling, and we tend to see a little bit of chop. So basically what I'm trying to say is that the easy money to the long side was already made. That is me just talking in terms of probabilities. Now the market is going to do what the market does best, which is doing whatever it wants to do. But if we think about probabilities, if we think about patterns in the market, then I think that the probability of seeing a little bit of back and filling, seeing a little bit of pullback is the higher probability outcome that we're going to see going into next week. So where exactly is support? Support is going to be right here, somewhere around 4,440, which is basically the Fibonacci support zone, measured from this low right here into this high right here. This is basically, as always, the 50% and the 61.8% retracement from the swing. And of course, if we happen to see the wave coming into that Fibonacci support level, then we're going to have two very important levels, and we're going to see some confluence of support levels at that zone. So basically, expectations, I think that if you're a bull and if you're super bullish in the market, of course you are on the correct side of the trend, but I think that you have to keep your expectations on check, because we have seen these really strong moves into resistance, and now I think that we're gonna see a little bit of pause. So this is gonna be for the SPX, and I think that we're seeing some pretty similar action in the QQQ. Now, why do I think that the QQQ might also see some consolidation, some pause, and a little bit of pullback next week? Let me see if I can pull up the weekly chart of the QQQ so we can see this level a little bit better. So you can see that we have had a pretty strong move all the way to the downside, all the way from the bottom of the bear market that we had, but we're starting to come into this very important level of supply of resistance. This is basically the previous support that we had in the previous cup topping pattern that we had before the bear market. So I think it's very important to understand that we have come all the way from the bottom, and now we're coming into this very important level of supply. This very important level of supply is, as mentioned, this previous support, now acting as resistance. So I think it makes sense to see a little bit of consolidation, a little bit of pullback in the market, or a little bit of pause before having another continuation to the upside. Of course, the market is going to do whatever the market wants to do, but we have to understand and we have to think in terms of probability, right? That's very, very important to do as traders. So let me just jump back into the daily chart. So once again, the roadmap for next week is patient, pause, and pullback. We have had some really easy weeks to make money. I'm sure that a lot of you have been able to capitalize on those moves. And now if you have some runners, just make sure to have your levels, just make sure to trail your stops, and just make sure to respect those levels if your stops get triggered. I think that's really important. And my advice will also be not to chase any new longs when the market is at these very important levels of resistance. Now, let me also show you what I'm seeing in the VXX, which is basically just the ETN for the VIX futures. And now we can see that we actually also achieved the target to the downside. You can see that we had this very strong move, this very strong intraday move that we have to resistance. We came right into that wave. We came right into this level of resistance, and now we're coming back into the target. So we also achieved the target in the VXX. That's another reason that I think that we might see a little bit of a pop in volatility, especially since we're coming into OPEX. OPEX tends to be a really volatile week. So I think that we're going to see a little bit of a pop in volatility. We're going to see a little bit of volatility in the market. We're going to see a little bit of chop, basically. So we have to keep those expectations on check. And most importantly, we have to be able to protect the money that we made when the trend was really easy to follow. So that's basically what I'm watching in the VXX. So just in summary, guys, the market is at resistance. The volatility is at support. I'm expecting chop. I'm expecting volatility, and I'm expecting a little bit of back and filling in the SPX. The support level that I'm going to be watching is 4,440 for the SPX, which is basically somewhere around 100 points lower from where it is trading right now. Now, in terms for the watch list, I don't think that is the best idea to do a lot of trading next week. That's why my focus list is actually just 2 names. So I'm just gonna share these 2 setups with you. I think that the best thing to do right now is just to be really patient, right? Wait for new patterns to emerge. Wait to see what the market wants to do after OPEX. I think that right now the best way to make money is just to sit and just wait. So the 2 patterns that I'm going to share with you, the 2 setups, is going to be basically a short in bonds. So this is the CV, which is the T-bond futures. And what I'm actually looking here is if we are probably going to see a continuation to the downside here. Now, I'm not really sure what is the relationship right now between bonds and equities, and I don't want to enter into that discussion. But what I do want to show you is what I think is a pattern of continuation to the downside. So you can see right here in the bonds futures that we have this consolidation. We have this breakout right here into demand. You can see that we had a really strong bounce from demand, and now my expectation for bonds right here is to get rejected right here at the wave, and then perhaps see a continuation to the downside. This is a pattern based completely just on technical analysis. I don't know anything about the fundamental part. I don't know anything about the thing with rates or anything. I don't want to get into that discussion. I'm just seeing a pattern, and I think that we might see continuation to the downside. You can see that I'm also seeing some resistance at my momentum indicators. You can see also that we have a squeeze. Right here we have a squeeze. We have momentum negative in both of my indicators, and we're coming into resistance at this Fibonacci zone, which is measured from this high right here to this low right here, and we're also coming into the wave. So I'm just thinking probably we're going to find some sellers, and we're going to see a continuation to the downside. You can play this with the TMB, which is the leverage 3x ETF for the TLT. So if bonds happen to see a pullback, then probably that ETF will rally to the upside. And then the other setup that I'm watching for next week is going to be PMW, which is Palo Alto. And the only thing that I'm watching Palo Alto is a continuation to the downside and a test of the 50 daily moving average, which is actually a pretty easy setup. You can see right here that we had a really strong move to the upside, very, very strong move in PNW. I'm not saying that PNW topped. I'm not saying that. I'm just saying that based on this pattern, I think that the probability of testing this 50 daily moving average and testing demand is actually a pretty highly probable outcome. So you can see right here that we had this sell-off. We came into this level of support right here, which is also a Fibonacci zone measured from this low right here to this high right here is the 0618 retracement zone. But you can see right here that we had a really strong candle to the downside, and now we're just basically just bouncing into resistance. You can see that this is starting to form a little bit of a bear flag here, and we're coming right into this 21 exponential moving average. We continue to find sellers as we continue to see those weak in the candles, and then my expectation is pretty simple. I'm just expecting for a continuation all the way down to that 50 daily moving average. You can see also my momentum indicators that we have a squeeze. Momentum is below 0, and you can see that my momentum here is also below that moving average. So that means that the probability of seeing some continuation to the downside in Palo Alto is high, but of course we don't know if Palo Alto probably just wants to base here, and then this 50 daily moving average is going to catch up with price, and then of course that idea will not work. So we just have to see if this pattern plays out, and of course keeping the stop above supply and looking for a target right here in demand. If you can get your short as close to the 21 exponential moving average, that gives you a really acceptable risk reward to let this pattern work in the market. So I'm actually not looking at longs, guys. I'm not looking for new long setups. I don't wanna buy anything at these levels. If we happen to see a pullback, then perhaps I'm gonna start to see what names are holding. But I actually think that right now everything is pretty extended. I think that we have a really, really easy month and couple of weeks to trade, and we have to understand that as traders, we just have to capture waves. If we happen to capture a wave that goes to the upside and we make money, we have to make sure that we make money on that wave, and then after that wave is over and we start to see a little bit of chop, we have to keep those profits. Then that way, when another wave comes, then we're going to be able to also make money on that way because we save our mental capital, and that's the most important thing in trading. So that's going to be it for the video, guys. Thank you so much, guys, for watching. Also remember, if you're looking for a community to join, I'm part of the Prime Trading community. You're going to be able to find that link in the description as well. Thank you so much, guys, for watching again, and I will see you on future videos. Have a great weekend, and bye bye. Take care.